All right, hello everybody, and welcome back to the channel. In today's video, we're going to be talking about something crucial: when to take profits in crypto. So, if you've been in the crypto space for any amount of time, you know that things can change very quickly, and one minute you're in the green, and then the next you're in the red. So, how do you make sure that you're locking in those gains without getting too greedy or too fearful? So, stick around, and I'm going to walk you through the process and show you my insights on why and where you should take profit. So, when to take profits. You should have predetermined goals. Before entering a trade, set clear profit taking levels based on either a percentage gain or a price target. So, for example, you might decide to take profits when your asset increases by 20%, 50%, or 100%. Taking profits helps you secure your gains and reduces your risk. So if you've ever been caught in a market dip after an awesome run up, you know how painful it is to watch those gains completely disappear. And taking profits at strategic points helps you keep what you've earned, and it can help you avoid emotional decisions during volatility. You also want to look at your risk to reward ratio. If you're willing to risk losing 10% of your investment, aim for a 30% gain before you start taking profits. You also want to start using technical analysis. Look at resistance levels. So if the cryptocurrency approaches historical resistance points, which are levels at which it previously reversed, consider that profit taking might be something that you want to do. Look at indicators such as the relative strength index, the moving averages, Fibonacci retracement levels, and Bollinger Bands to assess when the asset is overbought or due for a correction. And if you actually come over to Bitcoin here, I did a little bit of this here. We can see the resistance here. So taking a look at a real world example here, you can see times where it's back tested a little bit, and then you can see levels where it's had support. Partial profit taking. So instead of selling your entire position all at once, consider selling portions of your holdings as the price rises. For example, sell 25% of your position at a 50% gain and then another 25% at 100%, and so on. This way, you can capture profits at different levels while still keeping some exposure to potential upside. You want to look out for the cycles. So, cryptocurrencies can be prone to speculative bubbles. When you sense excessive hype or euphoria, often seen in bull markets, it may be wise to lock in profits before a potential market correction. And diversify your portfolio. So, as your position grows, you might consider diversifying your profits into other cryptocurrencies or investments to reduce your exposure to any single asset. If one asset becomes a disproportionately large part of your portfolio due to significant gains, it could be a good time to start taking profits and rebalance. Also, depending on your jurisdiction, cryptocurrency profits are subject to taxation. So it may be worth consulting with a tax advisor to time your profit taking, especially if you are looking to minimize capital gains taxes by holding longer, which is the favorable thing to do, long-term capital gains. Short-term capital gains are taxed a little bit higher than longer-term capital gains. And crypto tax deadlines match traditional assets at April 15th for most individuals. So you also want to avoid greed, emotional decision making, such as holding onto a position in the hope of getting richer, even when the price has already significantly increased, can lead to missed opportunities or losses. Stick to your plan, maintain discipline in following your profit taking strategy, avoid panic selling or waiting too long to take profits based on emotions. Fear and greed often drive investor decisions. When prices are rising, many feel the urge to ride the wave and buy in, even if it's a risky move. And when prices are falling, panic selling can set in, which can often lead to locking in losses rather than waiting for a rebound. Uh, so also, guys, just take a look at those resistance levels. Make sure that you know what you're doing and have a plan. Fear and greed are two of the biggest drivers of bad decisions in crypto. And when the price is pumping, you might think it's going to keep going up forever. I'll just hold a little bit longer. But the market doesn't always work like that. Eventually, everything corrects and you'll be left wondering, why didn't I sell sooner? And then on the flip side, when the market starts to crash, the fear sets in and you might panic sell. You might panic sell everything, locking in losses. And you don't want to let these emotions dictate your decisions. Stick to your plan and use profit taking strategies. And remember, it's okay to take profits. Always remember, taking profits doesn't mean you're giving up on the crypto space. It means you're being smart and managing risk while locking in gains. Crypto is an extremely volatile market, and securing profits is just as important as getting into a good position in the first place. So yeah, guys, if you found today's video helpful, make sure to hit that like button, subscribe if you haven't already, and drop a comment down below. Let me know how you guys plan on taking profits in crypto this season, and I'll catch you guys in the next video.